The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 12th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. If you and I use that one little 2x4 shift, it means that we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, what the buyers and the sellers are doing at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now's not too early. 877-927-6648. Of course, internationally, 727-445-1044. Inside the Tiger's Den, instant message me. You can send me an email, steve@tfnn.com. I'll be happy to get to answer any of your questions as best as I possibly can, and we'll try to use all the vehicles that are available to us. So let's go ahead and get this show started on terrific Tuesday. Of course, this is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 126 points. She's trading out at 18,353, blowing past the previous highs out there. So today's session will be important, how it closes. The S&P, that's cleared that, 2135 area. She's trading at 2154 right now. She's saying, sayonara, don't want to be ya. I'm headed to the moon out here. The NASDAQ Composite up 39 buckaroonies. That's trading out at 5027. Russell 2000 up 17 points. That's trading at 1207. The DAX closed up 130 points. The FTSE down 6. I don't think there's anything, any real meaning there, but maybe we'll take a look at the FTSE. Gold's trading down 23 bucks at 1332. Silver's only down 17 cents, trading at 2013. I'm hesitant to give you a short call on gold just yet. I'd like to see silver participate. In order for that to occur, silver's got to get down and close below $19.65. Now, that figure could change just by a hair or two, so if it's off by a penny, that's not good enough. But you start getting down below that 1960-ish area out there, and as long as gold closes below 1347, and right now it's on its way to doing that for sure at 1333. Then you've got the message that the top and or retracement, significant retracement, would be in place out there. So just make sure you're using stops. So again, we don't have a bilateral commission out here between gold and silver that are giving the exact same message just yet. Light sweet crude looks like that thing is headed off to the moon. Looks like that's if we take a look at what could potentially be sitting up in light sweet crude, we'll do that, which is a run back to the highs, but maybe even an A to B equals C to the upside. It would be a doozy out here. Right now, it's trading out at 46.60. That's up about $1.84. Leading the charge to the upside dollar-wise, you've got Sage Therapeutics up about almost $14, 40%. Whoa. They have clearly solved some issue out there. You've got NetSuite up about $10, Illumina up about $9, Shire PLC up $8, BlackRock up $7, Google's up $6, Shutterstock is up $6. To the downside, looking at individual stock-wise, is there any price line? Is off $9. We'll see if there's any volume behind that move. AutoZone down about $6. Regeneron Pharmaceuticals off $5. Randgold down about $4. So we'll take a look at some of the individual equities inside the mining sector, see if there's any kind of volume behind the move. But where do we begin? Where do we begin? Well, the chart that is perhaps the most important for us to pay attention to today, let's see if I can actually find it out here. I don't think I named it. Here we go. I did name it. It's this chart right here. So if you're watching this on Tiger TV, and I hope that you are, and if you're not, remember, you can always download that to your mobile device. If you're just listening in on your mobile device, just go to the homepage at TFNN.com on the upper right-hand side. You can just hit the button that says Watch Tiger TV, or you can go ahead and you can install the little app on your phone out there. What we're looking at, top portion of our chart, is the S&P 500. Bottom portion, it's a weekly chart, by the way, that we're looking at, is the Dow. Now, the reason why I've got it is just simply because it condenses the data, and it's easy for us to take a look at what we are looking at here, and that being the actual all-time what used to be the all-time highs. It's no longer the all-time highs out there, and that's going back into the May 2015 level. So as long as now what we know here is that the markets have made a move of a move. That term that Tom ought to patent out there, and I'm glad right now he hasn't, because then I'd have to pay him a royalty for every time that I go ahead and use it. I'd have to come up with something different. I don't want to do that. That 100% move of a move, oftentimes where a market will kind of stop in its tracks out here. Is that going to be the case this time? I don't know. I really don't know. At this stage here, as long as the Dow can close above 18,351.36, you're at 18,347 right now. And so in order for this to be, kind of a short-term top of any sort, you're going to have to get a failure at that swing point level, 18,351. But you're also going to have to get the S&P 500 to pull back below 2134.72. But in the meantime, before we continue on with this, let's go out to Fort Collins, Colorado, and let's speak with Mark. Mark, thanks for calling. Thanks for holding. How are you doing this afternoon?
Good. How are you?
I'm doing very well. Thanks so much. Good to hear your voice. And you wanted to take a look at the small cap. So this way we can kind of round things out and take a look at the markets out here. And so with regard to the IWM, or the small caps out there, let me get over to a page where I can look at it with you as well. Tell me what you're looking at and how I can assist you.
Well, there's a couple different things I've got going on. One is I'm in the triple of the IWM, which is the TNA.
Yes.
And trying to decide and figure out if we are actually doing an ABC up, at least on the IWM. It's tight because the volume's really close, but if you look at the weekly from the week of 2/8 of 2/16, where it was down at 93.64.
Looking at the weekly 2/8, yes, 93.64, got it.
And then you go up to the week of May 2nd, where we're at
115.05 or so.
Yeah, then we have a pullback, and then we break that, but we only break it with, that's 130 million. We break that with 111, but then the following week after it breaks that, it has 132, and then it starts to pull back, and then we pull back with heavy volume down into the week of 627 with 202 million, and now we're kind of trying to, we may have another high volume week, maybe low volume week. I'm not sure. I just didn't know if that week in early June, those 2 weeks in early June, late May, were enough to break that swing point with volume to say we're actually doing an ABC up.
And you're looking at the weekly chart because you're looking at more of a longer term trade here, or just because you think that's a better volume metrics? Kind of give me the feel for the flavor there.
Yeah, I just don't know if I trust the TNA volume as much.
Got it.
And then the other thing I'm in is I'm in a long-term fund in one of my retirement accounts, and it's based on.
All right, so we're going to come back to Mark and Fort Collins. We're going to go ahead and dissect and bisect the Russell 2000, the IWM. Mark, stay with us. We'll be back after a few minutes here. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Mark in Fort Collins, Colorado. We're taking a look at the IWM, the Russell 2000. He's in a long trade utilizing the 300% ETF out there, the TNA. And so Mark, during the break, I took a look at a couple of different charts out here. And the first one that we've got up on our screen here to take a look at, just first to overall market, a little bit of synergy, because all these markets should behave somewhat similarly in that if we take a look at the Dow and the S&P 500, what we know right now is that they are both trying to break out of long-term consolidation levels. In the case of the Dow, it's like a 2.5-year consolidation. Now, these happen to be monthly charts because they more easily illustrate the point, but we'll use the daily swing point highs out there as a key. So with regard to the IWM, whether it's making an A to B equals C to the upside or continuing to run higher out here, what we want to see is we want to see the S&P 500 stay above that 2135 level. I think it's 21, what is it exactly? 2134.72. And as long as it closes above that, that should bode well for the IWM. In the case of the Dow, it's the 18,351 level. We're just slightly below that right now. But I would say both of those have to fail in order to suggest that, okay, there could be some trouble with regard to the IWM trade. The lower right-hand panel of my screen shows the Russell 2000, again, also on a monthly chart. But we can see that it, too, is breaking above a resistance level, which has been a descending trend line. So we've got three of the indices that are breaking above resistance areas. The NDX 100, which happens to be in the lower left-hand panel, that's got a ways to go to get up to the top of its consolidation area. If that were clearing the consolidation area, I would think that we would see the market just continue to run to the upside no matter what. So that's the longer-term picture out here. And at this stage of the game, what we know at 1:20 in the afternoon is things look pretty good. With regard to whether the IWM has the longer-term A to B equals CD, I'd rather go for the conservative pattern out here that I know is in play, and that is that the IWM formed a Gartley buy pattern, which was confirmed. The Gartley buy pattern starts with the A point out here on June 8th, my B point down here on June 16th, my C point out here on June 23rd. It made more than a one-to-one. Obviously, I used this tool here earlier and stopped it dead in its tracks. But if I go ahead and, let's see, it was probably about a 1.272. Let me just add that in here. Maybe it was even a 1.618. But it made the A to B equal CD to the downside. And remember, only 40% of the time is it going to make a one-to-one level. Now, we use these as guidelines. But the real key here was the bullish signal that came inside the IWM was on the trading session of June 29th when we had that gap up. This trading session here on June 28th was not a bullish reversal signal at all. But when we did have the gap up on June 29th, that was a signal or a confirmation of this Gartley buy pattern. Now, a Gartley pattern, Gartley buy or Gartley sell, has 5 outcomes. Now, the nice thing is that you are beyond outcome number 4 today, and on a daily chart, you're beyond outcome number 4 with volume. So this is passing the swing point, the June 8th swing point, with volume. That June 8 swing point has 27 million shares. It has done 21 million shares today. There's no way that it's going to do less. Well, I guess it could, right? Theoretically, it still could, but it doesn't look like it's going to do less than 28 million shares. So you're passing, that level. Now, the thing is, and this really accomplishes the same task out here, and I hesitate to put that in here, but it is just a huge gargantuan A to B equals CD. What I would say is the next target level with regard to the IWM is really going to be an expansion of the swing points out here, and that's a swing points from the swing that it's passing today on June 8th to that low out here on June 27th. So its next target for us ought to be 121.48, the 1.272, and then maybe 125.10 out here. But could this be a larger A to B equals CD? It most certainly could, because if we go to the daily chart on the IWM, the candle session that you were really using as the anchor point on the weekly is really on a daily basis April 27th. And that had volume of 24 million shares, and that was surpassed with about 23 million shares, and then 28 million shares, and 26. So that swing point has been taken out with volume. And if that turns out to be the A to B equals CD that you are looking at, that says the Russell 2000, could make a move all the way up to the 129 to 135-ish level, which probably bodes well for that longer-term 401k account that you're taking a look at. But what we need in order for that to occur is we need the Dow to stay above that swing point high, the S&P 500 to do the same. And with regard to the Russell, what you want to continue to see is the Russell 2000 outperform the Russell 1000. And the way that I'm able to do that on my charting software is just simply divide the Russell 2000 by the Russell 1000. As long as the 2000 is outperforming the 1000, that alone is a very bullish message out here. So until that change, now, so what can cause a problem out here, or are we near a retracement level, possible retracement level? And for that, Mark, what I'll do is I'll just simply go to a 5-hour chart inside the Russell 2000 futures contract. Now, I have a 10-minute delay because I don't feel like paying them extra money that I don't need to in this case here. But what we can see on this chart is coming off of that bottom, from a 5-hour chart standpoint, the bottom from June 28th, it's very close to the 1-to-1 A to B equals CD. So in the futures contract, what you're looking for is you're looking for this thing to, get above the 1208 area. We're really close to it. The nice thing that we have going is we don't have a wave count to worry about. We don't have a price relative strength pattern to worry about. This does say in a pullback, though, a price could easily come back to 1189 and there would be nothing wrong with it. It might feel like there's something wrong with it, but that would be just simply a test of support using the 5-hour chart. So at this stage, everything looks pretty good. And just like if we were driving a car out here, in this case, we're driving the stock market car, we just have to keep our eyes on all the mirrors to see when something jumps out in front of us that we have to be warned about. But right now, I'm just not seeing it. But does that kind of help answer, your questions, or what have I missed?
Yeah.
Because I know you've taken a look at it.
Yeah, it does. I mean, I was looking obviously at the shorter term for the TNAs, but the longer term, I've got my retirement split into the S&Ps, and the small cap fund that it's in. It's called the Dow Jones U.S. Completion Index, which is the DWCPF. The problem with it's an index, so it's $DWCPF. I don't get volume on that, so that's the hard part to track about it. But I think it's semi-close to like the Russell 1000 or something in that range.
Got it. Okay. So all looks good. On the shorter term chart, I would just simply flip to a 30-minute chart out here. And the only patterns on the 30-minute chart of any significance would be price moving higher with less relative weakness. And it's not doing that at all. Also on the shorter term chart, if I switch to, let's see, the 30-minute pattern out here, just to give you, something to focus on or pay attention to, I would be focused on the market profiles. And on a 30-minute basis, it's cleared all kinds of resistance. The last resistance level on a 30-minute chart was at 1196 out here. So everything looks really strong. You're in the right trade as of 1:26 in the afternoon. That's for sure.
All right, thanks, man. Yeah.
You bet. That was Mark in Fort Collins. That was taking a look at the Russell 2000, the IWM. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to our next caller. Let's go to Mike. Mike, thanks for calling. Thanks for holding. I think you want to take a look at Toyota Motor Corp. So how are you doing this afternoon?
Good. I'm doing good. I actually bought the call options on Friday.
Okay, very nice. So you've got Toyota Motor Corp, and as we take a look at it, folks, I'm going to put it back up on my screen here in a minute. The ticker symbol here is TM. Obviously, you're seeing lots of gaps out here when we take a look at this stock. Now, the reason that you're seeing it is because of the currency conversions that are in place, or I'm going to assume it's because of the Japanese yen currency conversions here. So I'm going to go ahead on this chart and insert the Japanese yen. We'll just insert it as a line chart. Okay, so and at this stage here, just the reason to do this is just to take a look at them side by side to get a feel for the movement, inside of this equity, and make sure that it's also like trading the Japanese yen out here. Okay, so now that we've got those two in place, how can I help you with the trade? Is there something very specific that you're looking for that I can provide to you?
Well, I'm looking for an exit.
An exit. Okay. So let's do this. Let me add to this chart out here. Let's just see if I can add our TAS market profiles as well. Now, when you're looking for an exit, so the first thing that I would give you as one possible area of resistance, and I don't know how well these market profiles are going to be on this specific equity because of the currency piece of it, but I think you are more of a shorter term type focused trader when it comes to this. Is that correct, or am I wrong about that?
Both. I actually have I bought this in my mother's account.
Okay. Okay.
101. And I got options on my account that expire Friday.
Got it. Okay.
I have to manage them and maybe roll them over. I'm not sure yet.
Got it. Okay. So if our market profiles, which can provide us with levels of support and resistance, right now this is suggesting to you that 108.12, and right now it's trading at 106.75, would be your next area of resistance that this would need to clear out here. But it does look to me like the Japanese yen, has found depending on which side of the currency trade you take, has found support and is ready to continue to move higher. So with regard to the shares that you have in your mother's account, long term, unless the yen begins to get stronger again, which does not seem likely. It has had one heck of a move here over the past couple of days, and looks to me like this thing may have found a bottom. You'll know on the next pullback if that is likely the case. As long as the low from 2 days ago, which is 99.96, doesn't get taken out, then on that longer term trade, it looks like the yen has now turned the corner and it's ready to move higher. In this case here, the way we're looking at it would say that it would be weakening. With regard to your account where you've got options expiring this week, this is a real timing thing. If the VIX starts to spike up on that, how is that going to impact your trade? Those types of things. But 108.12 would be the level that I would be looking at.
Okay, great.
All righty.
Thank you. I was also thinking long-term fundamental. I know this thing was, they sell more Corollas than any other car in the world, and the Chinese are starting to buy cars. So part of it was like this thing is so oversold to me. It looked like a screaming buy. So.
Yeah, the real benefit on this chart here, when we take a look at this screen going back to 2014, is it's clearly moving with the Japanese yen currency pair. Right. So longer term, I would really focus on both those things. But as long as the currency continues to weaken, this trade looks good.
Okay, great. Thank you.
You bet. Let's go to Pat in Boston. Pat, thanks for calling. Thanks for holding. How are you doing this afternoon?
Good, thank you. And you?
I'm doing very well. Thanks so much for asking. MBLY, is that Mobileye, I think? Is that how you say
Mobileye.
it? Mobileye.
Looking at Mobileye.
What does Mobileye do? Do you know?
It's a chip that is going into autonomous driving cars.
Ah, is it? Okay. All right. So now, do you own this? Are you looking to get in? You're looking to sell?
I'm looking for a good entry point.
Looking for a good entry point. Okay, so as we take a look at Mobileye, right now today it's trading out at 47.73. The volume behind the move today is 2 million shares out here. This had passed a B point of a possible A to B equals CD, Pat. The trading session I'm looking is April 21st. That had volume of about 1.7 million shares, and it passed it with conviction, 4.4 million shares. So in essence, this has a price projection. We'll go ahead and get that for you with the A point starting at the lows on February February 9th, the B point being that swing that it passed, which was April 21st, and the retracement took place down here on June 14th. So right now, this is targeting the 51.73 level, just simply from a to B, our lightning bolt price projection level. Now, the way I would look at this move off this C to D leg stronger than A to B, and I would say this is more likely targeting 56, 57. And that's just looking right now at the right-hand side of this chart. Your entry point on this, if this were to pull back, right now would be the bottom of its TAS market profile, which is the swing point, in essence, from back on July the 7th. And that would be at a price level somewhere around 43.95. If you could get a pullback there on light volume, and by light volume, I'm meaning less than 4 million shares, less than 4.7 million shares, then you could go ahead.
4 million?
Yeah, 4.7 million shares was that little low that took place on July 7th. I don't know if you're going to get that pullback, but that's what I would be looking for. This thing has moved so far beyond that B point to 41.37. You know, now we've got a reward to risk scenario that we really have to take into account, because it may only be targeting 51.73. That's just about, what, $4 away from where we're at. You know, if I put this on a weekly chart, let's see if there's anything that shows up for us on Mobileye on a weekly chart out here. And there's really not. There's nothing that I see right now that just sticks out at me. Even on the weekly chart, it looks like it passed the B point with volume. That was the week that began April 18th. That had 10 million shares, and it was passed with 34 million shares. So, yeah, this has got some conviction behind the move. I think that's probably the same A to B price projection. But let me just take a look at that longer term just to make sure. So longer term, yeah, it's the same thing. It's targeting 51.73 out here. So I'd wait for a pullback on this one. I'd be patient to see if it does pull back for you.
Just wait. Okay. Thank you so much.
Hey, my pleasure. That was Pat in Boston. That was Mobileye. Let's go to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
Steve, you're a popular guy today.
I like being popular. It's always great to have callers out there. It makes the time just makes it just fly by. Now, you want to take a look at Randgold Resources. GOLD is the ticker symbol. Mighty fine looking.
Can I stop you just for 1 second?
Yeah.
It's actually two positions that I took yesterday. I'm actually short gold, the GLD. Okay. I have puts 130, August 130 puts, and then I also went long oil. I'm using the USL. I have their $10 calls, August $10 calls. So I was actually calling about the gold itself. I'm short it.
Got it. Okay. So if we take a look at gold specifically, thanks for clarifying that. That's helpful. And let me go ahead and pull up the gold contract. I just clicked on the wrong thing. I hate when that happens. First of all, let me say I like that trade that you put on for light sweet crude. So congratulations there, because that looks like that has formed a nice little Gertley buy pattern. But Brett, would you be kind enough to hold through this break here?
Absolutely, Steve.
All right, we'll be right back, folks. Dow's up 131.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're on the line with Brent in Martinez, California. We're going to take a look at both gold, the physical metal, as well as light sweet crude. So let's go. Let's first take a look at gold. And I've got the daily contract up on my screen. We know that this is pulled back. It's got some pretty decent volume behind the move, and you're using GLD. And I think you said you had was a 130 put on that.
Yeah, they're August.
August, okay. So we got gold pulling back at $21.30, and right now it's trying to trade down at $13.35. It's trying to bounce. Let me show you what it's trying to do first on the shorter term. Is that okay if we look at the short term first?
Yes.
Okay, so we're going to look at the short-term chart. I'm going to show you two different patterns that are out here that you want to pay attention to, in my opinion. And I'm going to turn off the daily and the weekly profiles. We're going to turn on just the 30-minute profile, and we'll expand this chart up here. So what we can see, and those are the red horizontal lines that we're looking at on our screen. Now, everything looks nice and bearish, so to speak, because we have new profiles that are appearing below the prior profile. So that looks good. And on this bounce here that is trying to get underway, the level that you want to be watching is 1337. The reason why I say that is during the last half hour, the half hour that ended at 1:30, you did have the first bullish candle that had formed out here, a nice little bullish engulfing candle that had formed since about 6 o'clock this morning, 6:30. Now that alone does not, in fact, make for a pattern that says the market is ready to bounce. However, it came at the completion on a 30-minute basis of an A to B equals CD to the downside. And so it was about a 1 to 1.272 A to B equals CD. So this is at a stage where we could see some type of a bounce. So if we see that, I want you to be able to anticipate it. And you'll know if there's going to be any kind of significance to the bounce if we see a close above 1337.50. Likewise, if we see this thing close below, I'm going to use the candle session that took place sometime around 12:30, so between 12:31 of 13:31, this will continue to resume itself to the downside. So just to give you the shorter term picture with regard to what's going on. Now, if we switch back to the daily picture and look at the gold contract out here, what I want to do is I want to switch back and turn on the daily and the weekly profiles. We're not that interested in looking at 30-minute profiles on this chart, but the areas that you're going to want to be watching next, and this is going to help you perhaps manage that put position, is when gold gets down into, should it get down into the 1315 to 1322 level. That is the daily profile. That's going to be a key number for you to be watching out here, because if we can see gold get below that, then the next level is going to be 1286, and then below that 1230. On the daily time frame chart out here, an area where you're good on this chart with regard to the short position is as long as the bounce doesn't take you above the figure of 1347.90. Now, this is going to change by a few pennies or so, over the course of the next several hours. But as long as gold stays below, we'll call it 1348, you should be pretty good on the trade. If we do get more of a bounce, it gets above that first level I gave to you, watch 1348 like a hawk. And the reason that I say that is because we just don't have a confirmation yet in with regard to silver. Now, look, the two can trade certainly independent of each other, but on a bullish move in the metals, you'd sure like to see confirmation from both of them. And it's that little red line that is on my chart out here on the bottom panel that's at 1965 that we really want to see. No, it depends whether you're bullish or bearish. So I'm on your side right now because you're on the bearish side. And but we got to see silver get below 1965. Otherwise, we just don't have a uniform message. But thus far, everything looks good. Anticipate a bounce, and if you see a failure, look for price then to get to the 1315, 1322. So with regard to gold, I know that was a mouthful. What questions have I posed for you, or what else is it that I overlooked?
No, that was very thorough, Steve. That's in line with what I'm watching, and I had some targets down on the GLD itself.
Yes.
Oh, I'd have to go back and look, but you more or less covered what I wanted to ask you about that. And then
the reason, Brett, that I wanted to, so I've got the GLD up on my screen for you, and the GLD has its own set of market profiles, which when I take a look at, I'd really prefer to use the underlying instrument. I prefer to use the gold contract. I don't know how reliable, and I don't mean that in a negative way, I just don't know how reliable these profiles are, whereas the actual gold contract, I feel like 100% confident in them. But in the case of...
It's always trickier when you're dealing with something that's not trading at the same time that gold actually is. So it's going to have...
Exactly.
Yeah, it's kind of, it's a little funky. I agree with you. Looking at obviously oil, if I'm doing the USO, the actual gold contract, if I'm doing the GLD, it makes absolute sense what you're saying.
Now, the beauty about the GLD, though, what I'd like being able to go back to it is, as you say, we've got a shorter time frame versus the actual contract itself, but you've got volume today. So you've got volume, in essence, off of the highs here because you're at 18 million shares, and it's going against the last breakout that only had 15 million shares. So from that standpoint, things look hunky-dory for you. Should we go switch over to the light sweet crude contract?
Yes, please, if you could.
Okay, so in light sweet crude, let me turn a couple of things off here. I'm going to turn off the little volume bars as well as the market profiles. And the beauty about this trade here, a nice catch on this, really nice catch, is that when we take a look at light sweet crude, this completed just a 1-to-1 A to B equals CD to the downside on a daily basis. So that is a Gartley buy. Now, this could be... I really hesitate. I'm going to go ahead and give you the longer-term view out here, but you've got a nice Gartley buy pattern, only a 0.382 retracement. And folks, when I'm referring to a 0.382 retracement, I'm referring to the bottom that occurred on January 20th, from that low at 32.22 all the way to the high at 52.28 back on June 9th. Only makes a 0.382 retracement. If that's it, that tells you that this is strong like bull. I mean, like as big of a bull as you can get out here, and a huge bullish English engulfing candle. So what are the next things to be looking for in the case of light sweet crude? I'm going to try to pull up on my screen one level that you want to be watching like a hawk. You want to make sure that it gets light sweet crude gets above this, because it could be a counter trend, little counter trend rally here. And what you're looking for, it looks like it's right around the 47.60-ish range, and you're at 46.85. So 47.60 is a level, Brent, that you want to see light sweet crude get above. And if it does, then the price is going to head back to 50.90, then 52.28, and even the unthinkable, which is a huge A to B equals C to up pattern. And it is so huge that, what does that even project for us? Let's just see, just so that we know out here. In the price projection is 64.48. I would say that's not even an accurate one. I would have to say 69.94 would more likely be it. But it sure looks like a really good trade out there. Nice catch. I'm going to switch over. First, ask me any questions that you've got while I'm trying to switch over to a 30-minute contract to see if there's, like we did for gold, see if there's any. Oh, we've got another break coming up. Now, you're welcome to stay if you want, or or you don't have to.
I think that covers it, Steve. I appreciate it. We'll see what happens tomorrow with the inventory numbers.
You got it. All right. That was Brent.
Take care, Steve.
You bet. Brent in California. Steve Rhodes with TFNN. I got the Dow up 124. We'll be right back, folks.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 122, S&P is up 17. Even though Brent had hung up, I was able to pull up that 30-minute chart. I'm glad that I did for him as well, because it's another level that he's got to be paying attention. Well, he doesn't have to, but I would be paying attention to it. And that is, if we take a look at the 30-minute chart out here, you can see that off of the low. Now, this is a low that came in on July 11th. At about 4 o'clock in the afternoon, you can see that price has been moving higher, doing less relative energy, and you are in wave number 7 out here. So now that doesn't mean that the move is over, but you got to anticipate a potential retracement or pullback if this pattern confirms. It has not confirmed just yet. Something you want to be paying attention to. Watch 46, 48 on any kind of retracement. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Good afternoon, Steve. I know you've just got 2 minutes left. First, congratulations on directing your clients to get long in the stock market back on that June 28th.
Thank you. Very nice, yeah.
Could you give me an update, please? You do some seasonal studies, specifically the Dow Jones seasonal during presidential election years. When does that suggest looking for a late summer high, please?
Late summer high. Would you like the exact date?
Yeah. Yes, please.
Okay. Well, if we follow that pattern, which there is nothing to believe that we won't at this stage, here is what you would expect. You would expect that the market's going to move higher into about July 23rd. I'm not sure if that's an actual trading day or not, but sometime right around July 23rd. And then at that stage, we should see about a 1-week pullback, calendar-wise, down into July 31st. And then the markets move higher into September the 9th. And that is if the market follows along the second term, the 4th year of a second-term president. Now, if the markets are trading above, the markets being the S&P 500 and the Dow are trading above these little breakout areas, then I would say that pattern is very likely to be the one that is in play versus the annual seasonal pattern. So the markets ought to move higher into the July 20th to 23rd. That doesn't mean that there's not some pullback level. And then what you want to be watching is what happens right around August the 1st, July 31st. If the markets start taking off topside, it's going to be one heck of a summer as the markets move higher into the fall time frame. How's that for an answer?
Answered my question, Steve. Thanks so much. You have a good day.
You bet. That was John in Philly. So these breakouts here that we're paying attention to, folks, in the S&P and in the Dow, clearing those previous swing points from a longer-term standpoint, longer term being the monthly charts, have got some very significant connotations if you are a aficionado of the Chapman wave. And you should use every tool that we have here at TFNN.com from all of us, and then find a way to go ahead and put those together for you. Of course, if you'd like somebody to put those together for you, then come on over to the homepage of TFNN.com and sign up for my newsletter service, because that's what I do on a daily basis for you. Of course, I provide all of this information, long-term charts that are included in an expanded edition of the newsletter, but I give you a really up-to-the-moment exactly what the markets are doing in many different areas. Today we talked about light sweet crude. Obviously, we follow gold and silver out here, but the connotations of with regard to where the markets complete the month out here, if we are above 18,351 and above 21,3472, and the Russell continues higher, which is taking out its resistance zone, what you'd expect is a little bit of the next buying time. Your next real buying time is at the end of the month here, at right around the July 31st level. So, folks, stay tuned. Our man David White, he's going to be up next. He's our polar bear. And stay tuned. You want to listen to his opinions as well. And then, of course, it's Tuesday. That's the Tom O'Brien Show from 3 to 5, and Andy Heck from 5 to 6. So have a terrific Tuesday. We'll see you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.